If I say for next 2 to 3 years, Tata Motors would be enjoying what could be called as a twin engine effect, which is financial leverage impact and the operating leverage impact, because that in a sense is a very potent combination for any shareholder to get excited about. After years and years of hard work, are you reaching that stage where you will enjoy both financial leverage uptick and operating leverage uptick?
I think the deleverage that we called out is starting to play out. And by we ended the quarter at about 41,000 crores of debt and net automotive debt that we had. And that needs to come down in domestic Tata Motors, roughly about 8,000 crores. That should come to near zero. JLR is sitting at about 25,000 crores. That should come down to about 10,000 crores. And of course, Tata Motors Singapore still has about 9,000 crores of debt, which will remain, and that will get taken out next year. You add it all together, then this 41,000 coming to sub 10,000 crores is what our first port of call is. Should definitely give benefit in terms of financial leverage kicking in as interest rates go off. And then as volumes pick up and fixed cost controls continue, operating leverage should also play out. So that's what is giving us the confidence that I think we should, as we execute this plan better, we should see improved performance.
Right. My next question is that what was the need for Tata Motors to extinguish their DVR shares? I mean, there was no financial urgency for you to consider it. So what really prompted this move?
See, I think ever since we took out the ADRs, we've been looking at simplifying our capital structure, and ADR was the first clear out of that, because it was done at a point in time when the markets were different, Indian capital markets were different. So therefore, the ADR story played out, and DVR is the next logical choice from that. Now, DVRs, the challenge is it was done in 2009, and then the new regulations came in 2009, which made it very unattractive. And since then, the discounts on DVRs have been sitting at about 45-48%. And it didn't matter whether we paid dividends, it didn't matter whether share price went up, went down, the discount continued to remain. We did everything in our trick to actually infuse liquidity. We did a QIP, we did a rights issue, we put this in the FNO. Nothing mattered. It is just that the instrument has lost its flavor, and we are the only large corporate in the country with a DVR. And that is where this whole thought process of let's do a capital reduction, and so that we extinguish these shares completely, and in return pay them as ordinary shares. And thing that is not, I don't think, has been appreciated. The promoters voting is actually going down by 3%, which is very interesting, because given the governance standards of this group, we have done everything possible from a fairness perspective, but that meant that the promoters are actually losing their voting rights, which they have consciously bought into. So therefore, that's the best that we can do. And the advantage now from a Tata Motors perspective, if I just keep the shareholders aside for a minute, just look at it from a company's perspective, the discount that was there in the market cap of the company goes away, which means tomorrow, if I assuming we want to do a capital raise, we don't have this confusion anymore. And it gives full flexibility because it's just one instrument. I don't have to now worry about DVRs, I don't have to worry about ADRs. It just becomes a simple process, and transparent pricing is possible. And therefore, that gives us immense financial flexibility. So that is what has gone behind us. With this, I think the bulk of the simplification initiatives that we had undertaken is now been dusted. I think the company is now fit for the future.